All right, today we are digging into the latest blockbuster earnings report from BlackRock, the biggest asset manager on the planet. And trust me, this is way more than just a bunch of big numbers. It's a story that actually shows us where investors are putting their money and really where the future of investing is headed.
Okay, let's just start with a headline number because it's just wild. At the end of 2025, BlackRock had $14 trillion under management. That's a number so big it's hard to even wrap your head around it. It represents the savings, the investments, the retirement funds of millions and millions of people all over the world. And just to give you a little perspective on what $14 trillion really means, think about this. That single company manages more money than the entire yearly economic output of Germany and Japan, the world's third and fourth largest economies put together. We're not just talking about a big company here. This is a massive force in the global financial system. So, what in the world makes up this $14 trillion empire? Let's peel back the layers and see what they actually own. Well, as you might guess, BlackRock's business is spread all over the place. The majority of it, about 55%, is in stocks or equities. And it's a truly global operation, though you can see their home base in the Americas still makes up about 68% of their clients. Their investments really cover the whole gamut, from your classic stocks and bonds to alternative investments and, yep, even the new world of digital currencies. That scale is, incredibly impressive. But what's really stunning is how much bigger they got in just 1 year. And that brings us to the absolute flood of new cash that came their way. Get this, in 2025 alone, clients handed BlackRock nearly $700 billion in new money to manage. That's a company record. An inflow of $698 billion, that shows an incredible amount of trust and momentum, even for a company that's already this huge. So this leads to a really fascinating question. In a world with endless investment options, where did people overwhelmingly decide to park all that new capital? Let's follow the money. And this chart, wow, it gives us a crystal clear answer. The big story of 2025 was the ETF. Out of that nearly $700 billion in new money, a truly staggering $527 billion went straight into BlackRock's exchange-traded funds. It's a massive signal that investors are craving the low costs, the diversification, and just the sheer simplicity that ETFs offer. Okay, so managing all this money is one thing, but how does a company like BlackRock actually turn that incredible scale into cold, hard profit? Let's take a look under the hood at their business model. What's so interesting here is just how steady their income is. A massive 76% of their $24 billion in revenue comes from these simple, recurring base fees. It's basically them taking a tiny, tiny percentage of that giant pool of assets they manage. So their model isn't about making big, risky bets. It's a reliable money-making machine powered by pure scale. And yeah, that business model is working extremely well. You combine those record-breaking inflows with markets doing well, and you get a 19% jump in revenue for the year and a really solid 10% growth in profits. The formula is pretty simple. More assets plus rising markets equals serious growth. But look, a company this big can't just sit still. So where does a $14 trillion giant even look for its next big wave of growth? Well, we don't have to guess. The answer comes straight from the top. The CEO, Larry Fink, has been very clear that the company's future is in what he calls new growth channels. He specifically points to private markets, investing in companies before they go public, and also to digital assets and tokenization. That's their roadmap for the future, right there. And this isn't just talk, by the way. They're really putting their money where their mouth is. The growth in this area is just explosive. Their client assets and alternatives, which includes things like private credit and infrastructure projects, jumped by nearly 50% in 1 year. It went from $455 billion up to $676 billion. This is their pivot to the future, and it's happening right now. Okay, so BlackRock is a giant, and it's getting even bigger. We get it. But why should any of this matter to the rest of us? What is their strategy telling us about the future of finance? BlackRock's success is basically a giant blinking sign for the entire investment world, and it highlights 3 huge trends. First, the absolute dominance of ETFs just confirms that the shift to cheap passive investing is unstoppable. Second, their big push into alternatives shows that the hunt for higher returns is moving away from the public stock market. And third, their focus on digital assets shows that crypto and the like are moving from a niche hobby to a serious asset class for the big players. And all of this really leads to a final, pretty important question to think about. When one single firm has this much power and is signaling such clear moves, What does its dominance mean for the future of your own money and your own investments? So let's wrap this all up with the key takeaways. First, in modern finance, scale is king. Being the biggest creates this powerful feedback loop of more growth. Second, the ETF engine is just roaring ahead. It's the default go-to choice for millions of investors. And finally, the next frontier is private. The biggest players are pushing into these less accessible markets to find that next pocket of growth. And these trends, really brought to life by BlackRock's incredible year, give us a very clear look at the future of investing.